Adobe has lost nearly a third of its value this year, and the reason behind this drop is not what most investors were expecting. It was not driven by weak revenue or declining profits or even poor leadership decisions. Instead, it comes from a much deeper shift that is happening across the entire creative industry. For the first time in its history, Adobe is not just competing against other software companies that are trying to build better tools. Now, they are up against artificial intelligence that is actively replacing the need for those tools altogether. This creates a completely different type of threat that the company has never had to deal with before. This raises a much bigger question that goes beyond just one stock. Will Adobe become another legacy tech company that gets disrupted and slowly fades out of relevance? Or will this be the moment they reinvent themselves and become even more dominant in a world powered by AI? Adobe stock has dropped by roughly 30%. This is a significant decline for a company that has historically been viewed as one of the most stable and reliable businesses in the entire software industry. It's even worse given Adobe's dominant position in creative tools that are used by millions of professionals around the world. This is not a company that suddenly stopped making money or lost its customer base overnight, which is exactly why this drop stands out. It signals that investors are not reacting to present performance, but instead to future uncertainty. What the market is really pricing in right now is the possibility that Adobe's core business model could be challenged in a way that fundamentally changes how value is created in the creative space. And that is where things start to get interesting. The core fear driving this entire situation is centered around AI and its ability to drastically reduce the barriers to creating high-quality content. This is because it directly reduces the value of tools that were previously essential for that process. In the past, creating professional-level visuals, videos, or designs required both time and technical skill, which made Adobe software incredibly valuable. It enabled users to produce results that would otherwise be difficult or impossible to achieve. Now, with the rise of AI, many of those same outcomes can be generated in seconds using simple prompts, which means that the complexity and expertise that once justified Adobe's pricing and dominance are no longer as critical as they used to be. This creates a scenario where the demand for traditional creative tools will decrease over time, not because creativity is going away, but because the process of creating is becoming significantly easier and more accessible. When we look at the competitive landscape, it becomes clear that Adobe is not just facing one single threat. Instead, there's an entire wave of new tools and platforms that are redefining how creative work gets done. Companies like Canva have already simplified design to the point where beginners can produce clean, professional-looking content without needing to understand complex software. Canva alone has already taken a portion of the market that Adobe used to dominate. On top of that, tons of new AI-powered tools are now entering the market and pushing things even further. Tools like Nano Banana and Higgsfield remove the need for manual creation entirely. Users can now generate images, edit videos, and produce marketing assets with minimal effort and almost no learning curve. Historically, when industries shift from complexity to simplicity, the companies that built their dominance on complexity struggle to survive. In the traditional model, skilled creators held the advantage because they knew how to use complex tools to produce high-quality results. This made platforms like Adobe essential for anyone who wanted to compete at a professional level. Now, the advantage is shifting toward individuals who can effectively use AI to generate outcomes quickly, meaning the bottleneck is no longer technical skill, but rather the ability to direct and refine AI outputs through prompts and iteration. As this transition continues, the value may move away from the tools themselves and toward the platforms that control the interface between users and AI. The introduction of a completely new competitive dynamic means Adobe has to navigate carefully. Right now, the market is betting on their demise. Adobe is not ignoring what is happening. In fact, the company has been actively investing in AI as a way to stay relevant and potentially even strengthen its position in the market. Their main initiative in this space is Firefly, which is an AI system designed to be integrated directly into Adobe's existing products. Firefly allows users to generate and edit content using AI without having to leave the Adobe ecosystem. This approach is strategic because instead of forcing users to adopt entirely new platforms, Adobe is trying to enhance the tools people are already using by embedding AI capabilities directly into their workflows. If this strategy works, Adobe could position itself not as a company being disrupted by AI, but as the platform that brings AI into professional creative environments in a way that feels seamless and practical. One of the strongest arguments in favor of Adobe is the fact that its products are deeply embedded in professional and enterprise environments. They have successfully created a level of stability that is often underestimated when looking at short-term market reactions. Large organizations rely on Adobe's software for everything from design to marketing to content production. These workflows are not easily replaced because they involve teams, processes, and integrations that have been built over many years. Switching away from Adobe would require not just adopting new tools, but also retraining employees, restructuring workflows, and potentially sacrificing efficiency during the transition. Companies hate this, which makes them much less likely to make sudden changes. This kind of earned ecosystem gives Adobe time to adapt and evolve, which is extremely valuable during periods of disruption where speed of execution can determine long-term success or failure. Another key development that adds complexity to this situation is Adobe's announcement of a $25 billion stock buyback. This is a significant financial move that sends a strong signal to the market. When a company commits that much capital to buying back its own shares, it is typically an indication that management believes the stock is undervalued and the current price does not accurately reflect the company's long-term potential. However, buybacks can also be interpreted in a different way, especially during periods of uncertainty. They can be used to stabilize a declining stock and maintain investor confidence in the short term. This creates a situation where the same action can be seen as either a sign of strength or a defensive move, which adds another layer of uncertainty to how investors should interpret Adobe's current position. While most of the market is focused on the risks associated with AI, there is another perspective that suggests this entire narrative might be missing a much bigger opportunity that is developing beneath the surface. Some industry leaders believe that AI could actually expand the creative market by a massive margin, bringing in millions of new users who previously did not have the skills or resources to create content at a high level. If that happens, the demand for tools that can refine, enhance, and scale AI-generated content could increase significantly. This would play directly into Adobe's strengths as a platform designed for professional-level output. In that scenario, Adobe would not be competing against AI, but rather benefiting from its growth by becoming the layer that transforms raw AI generation into polished, usable content for businesses and creators. Despite the potential upside, the biggest risk facing Adobe right now is execution, because having a strong position and a clear strategy does not guarantee success if the company fails to move quickly enough or deliver competitive products. The pace of innovation in AI is extremely fast and new tools are constantly entering the market. Adobe needs to continuously improve its offerings in order to stay relevant and maintain user engagement. If users begin to see better results or more value from alternative platforms, even long-standing habits and workflows may not be enough to prevent a gradual shift away from Adobe's ecosystem. The situation with Adobe comes down to a simple but important decision that every investor has to make based on their own perspective of where they think the industry is heading. If you believe AI will completely replace the need for traditional creative tools and that platforms built around simplicity and automation will dominate the future, then Adobe may not be the best place to allocate capital. On the other hand, if you believe that professional level tools will continue to play a key role in refining and scaling creative output, and that Adobe can successfully integrate AI into its ecosystem, then the current decline could represent a compelling opportunity. The market is currently pricing in a significant amount of uncertainty, which creates both risk and potential upside depending on how this transition plays out over the next couple years. This is one of those situations where the answer is not obvious, and that is exactly where some of the best opportunities tend to exist. I want to hear your take on this because this is one of the most debated topics in the market right now. Different perspectives can reveal insights that are easy to miss when you are only looking at one side of the argument. Don't forget to like if you enjoyed. And if you want more breakdowns like this, make sure to subscribe to the channel. We only focus on trends that have the potential to move money before they fully play out.